What's going on, everyone? Gilman with Wellthy Stocks back with another Tesla update video, ticker symbol TSLA, where we take a look at how Tesla stock traded today, key levels of support and resistance that we are looking at moving into the future. And we'll also talk about why the market overall was very down today. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Tesla are. And I'd love to chat with you guys down there. So let me pull up the chart here real quick and I will hit record and we will get right into it. So another pretty deep red day for Tesla, you guys. We are down about $60 on the day, a little bit more in the after hours, which is about 8% of a drop, which is pretty significant. So that's what we've seen today. Overall, the markets are looking really weak. If we take a look at the NASDAQ, down 3.5%. If we take a look at Dow Jones, down 555 points, another 66 points in the after hours. And if we take a look at the S&P 500, down also 2.5%. So compare that. Tesla was definitely, a little bit weaker than these indexes, but goes to show you that all indexes were relatively, or very rather, red. And so what's the reason for that, right? So a couple reasons, right? First thing, if you want to blame GameStop, right? People putting money in GameStop, getting out of other stocks, you could do that. And so maybe short covering as well. But I think the real reason is the 10-year industry or 10-year treasury yield reached its highest level since in a year, pretty much, right? So that's really important because if you're invested in the S&P 500, right, you're getting about 1.5% dividend yield while taking on kind of the risk of the overall stock market, right? So yes, I agree that part of the S&P growth, or a lot of the growth, is not the dividend yield; it's the amount that the S&P will go up in a year. But and for investors, right, if they're looking for kind of that lower risk portfolio, if they're getting the same kind of yield from a treasury bond, which is pretty much risk free, and the S&P 500, which yes is diversified and yes is a lot less riskier than most shares, risk-free versus a little bit of risk for the same kind of yield. That's one of the reasons why. So a lot of investors, as they're getting kind of scared about the valuations of some of these companies with the amount of run-up that we've seen in the past year, they're taking their money and potentially putting it into yields as we see that go up, which I think is actually the main reason why we've seen some of this fall happening that have hit certain companies really hard. If you take a look here at the RSI, right, we're at 34, so we are getting to that overbought level. I think we're pretty close to it, right? Anything under 30 is considered overbought. So we're pretty darn close to it. So now let's take a look at, what our future levels of support are, what our future levels of resistance are. And then before that, let's take a look at how Tesla stock traded today. So yesterday, right, towards the end of the day, we pushed up towards the mid 740s, mid 700s. And we talked about, potentially, bouncing off of the 730s level because we were pushing down in the after hours. Here's when I made the video and I said, hey, maybe we see that 748 tomorrow as well. It was clear in the pre-market though that, we were heading downwards. Futures weren't looking too pretty. So then that's when we start looking at some of our support levels, right? So right out the gate, we broke through the 732s. We were bouncing at the 717, which is our next level of support. Right out of the gate, you guys, I'm gonna zoom in here because that's the only way I could really show this, right? We bounced down, perfect bounce from our level, 717, 716, about $1 off, pushed up, got above our level for just like literally a minute, right? This is a 1 minute candle. And then from that point on, it was all downhill, right? So broke below this level, broke below VWAP, bounced off of our 717 level, VWAP, tried to bounce, couldn't really, broke below, tried to break above, couldn't. And then it was down, try to bounce, couldn't, went down, try to come up, bounce, and then broke below again. And then we finally bounced off of our 670.58 level. Our level is at 670.05, so about 50 cents off. And then we pushed up and then closed. So we did not close at high of day. We did not close at low of day. Wow, I cannot talk today. We did not close at low of day. We did get a nice bounce off of the 670. pushed up into the close at 682. What I did like about today was that what I didn't like was pretty much everything else. We were so red on the day. I mean, 8% drop is terrible. It's huge. We were way below VWAP, and it just seemed like we could not, really get above it. Overall market weakness, I get it. Tesla was just a little bit worse, as it typically is, because Tesla is a very volatile stock. Now let's take a look at future levels of support, future levels of resistance, and maybe we'll see what we see, right? So, yeah, so we are right here, you guys, which is in between, kind of these two levels. So let's take a look at what we have on the downside, and then we'll take a look at what we have coming up on the upside. So on the downside, we've got the 678 level, again, not too far down. Then we've got two levels here in the 670, 672, again, not too far from here. And then we've got the 658 and the 641, and then the 614, right? So those are what I'm looking at on the downside. First one being, the 672, 670, and then 658 and 641, and then 614. So if it starts to head down, I don't personally foresee it going down to 614. If it does, hopefully it's a bounce like we got 2 days ago. But the fact that we went down there 2 days ago is the reason why I'm pointing out all these levels of support. Markets are looking crazy weak right now, so I want to make sure we're prepared on what could be happening next. On the upside, we've got the 694 and the 698. Again, two levels really close to each other. If we break 700s, I'd like to see us push 717 and then 732, which we were doing earlier today. But, at the same time, what I want to focus a little bit on, let me hide these drawings for a second, is these EMAs. So you saw today we got a pretty nice bounce off of that 89 EMA. And if I scroll back all the way here, we haven't really closed below the 89 EMA in a really long time, right? I mean, I'm going back to last year, really, other than the COVID time, we've come down to the 55 EMA back here in September and end of September, and also here in November, but we haven't really closed below the 89 EMA. So clearly we're below this 55 exponential moving average that held up as support last time. What does that mean? That means we're looking at this 89 EMA, and that point is at $674, you guys, 673.61 to be exact. That's a really, really key level of support for us. I really think that, hopefully if we keep going down tomorrow after a red day like today, hopefully we get a little bit of bounce at 673. I think it's really crucial for it to find support there, because below that, it's really in no man's land. If I bring in the moving averages, right, we've got the 200-day moving average, but that's all the way down at $459, which I don't think Tesla will go down to that, right? Definitely not. That's a long ways down. But with the weakness of the market and how close we are with the 89 EMA, that's sort of what concerns me, is that $673 is only about a $9-10 drop more, and we did dip below it 2 days ago as well. So hoping that we can, stay above it and start to push up towards the 55 and the 739s. Again, the key levels of support and resistance that I point out, that's what I'm looking at as well. I think we're in a very weird spot right now, especially with the indexes, because look, a couple times in the past few months, we've bounced off of the 55 exponential moving average. We've bounced off of this line as well, the 34 here and here in late December, early January timeframe. And then in the beginning of February, we dipped to the 55 EMA. So that's why I'm like, hey, we're between 34 and the 55. So we have run room down to the 55, which is about another 1.5% red day. We could also drop all the way to the 89 like we did back here in September and late October. Hopefully that doesn't happen, but it is a possibility. And so if that happens, we're looking at, about another 3 to 4% drop. That'll take us to its 89 EMA. That's why right now I'm very uncertain about where we go next. I'm not just going to say, oh yeah, we're about to start rebounding, because I think a lot of it has to really do with, where the indexes go and what the overall market looks like. As we saw, yesterday, nice green day, followed by a nasty day 2 days ago. But again, we're down again today, right? So markets are very choppy right now. And I'm looking at the indexes because I do see a little bit of downside. If you take a look at Tesla per se, right, getting to that overbought state, getting really close to this 89 EMA as well. So mixed signals either way. That's why I'm kind of following levels of support, levels of resistance, to understand where, it could bounce or where it could not bounce, rather than just saying, oh yeah, I think it's going to go up now, or I think it's going to go down now, because again, we're in a kind of in-between stage for now. So hope you guys found this video helpful. Hopefully, you know, we don't see a crazy red day tomorrow to end the week. It's been a pretty bad week, right? 3 out of 4 days were red for me personally. So hope you guys are doing maybe a little bit better than I am. Let me know down in the comment section what you think Tesla's going to do, and I'd love to chat with you guys down there. As you can see in the after hours, everything here on my list is red, which granted, it's a lot of tech, and tech's been lagging, but still, if that's any indication of what tomorrow is going to be, we're in for another rough day. So as always, I'll keep you guys posted. Don't forget to like and subscribe if you enjoyed. Let's remember to be a bit better every single day, and until next time.